Hi everyone, a huge warm welcome to today's Monday Market Update. This is going out in three groups, the VIPs, the graduates, and of course, masterminds. Thank you for everyone who joined us on the boat and at the lawn bowls at the Gold Coast this last weekend. It was phenomenal. I landed back in Adelaide this morning. It was a very long night. It was a lot of fun. It ended obviously at the yacht club of the boat and at the Sheraton, and got to just know the mastermind family that much more. It was incredibly pleasing. There's been a few of you in the mastermind groups that knew that I had a little bit of a speech prepared in case Joe wanted to call me up on stage, which he did, but he didn't hand me the microphone because he was in his element and he wanted to get through things so people could enjoy more time on the boat. But you have asked if I could share a few of those things because I just wanted to highlight what an extraordinary year it's been. It's not long at all. I'll go through it and then we'll get into some of the data, some things I'm seeing on Twitter and the charts. It's not going to be too intensive today. Mainly because there's not a lot happening today, and also because I don't want to take too much of your time, and the weekly's just closed. So we'll cover that a little bit more later in the week. Okay, so I'll just share my screen and then we can get into it. Okay, so Joe Shu is an incredible talent. We know that in the financial sphere, also with the holistic approach to investing, and I guess also his success in the crypto space, education and teaching. But I wanted to make a little point last night just to say how good he is at putting on events, being inclusive, and making everyone feel welcome and getting around and saying hello and networking and bringing in as many like-minded people as possible. And then I was going to make a joke that he wanted to add party planning to his resume. He rivals everyone maybe except for the SwiftX team who threw a boat party on around Sydney Harbour during ACC, which was phenomenal. They're trying to one up each other, and I think next year might be bigger and better. So maybe book your tickets for that one early. Okay, so a big focus for us for 2025 was the holistic side of investing because we knew quite early on that this cycle was different, obviously, with the ETF era really changing the game. And now we're in uncharted territory. The 4 year cycle is over. No matter which way you spin it, it's just, are we in something new or are we in a self-fulfilling prophecy? My personal take, and masterminds know this, is I'm about 80-20 in the fact that 2026 and beyond is going to be quite positive in this new era. And we're right in the middle of shedding the 4 year cycle narrative, but we have to shed it. And price has to go higher to shed that and almost give the market some belief, to lift the weight off the shoulders of investors and of the market. The tailwinds are just too great for me, and it doesn't make any sense what we're seeing in other markets, what we're seeing in the macro. It doesn't make any sense why we're down. There is a huge divergence in price and fundamentals at the moment. And I'm just not seeing the reasons why crypto would not, Bitcoin and crypto would not continue to move higher when everything else is. So that's just my thoughts there. But the holistic approach with that target in mind, we had Koh Samui, and Koh Samui was our investor retreat, and I thought it was a huge success. Everyone that went thought it was a huge success, and we've already got hopes and plans to do it again next year. And there's a phrase I've kind of coined for Joe, which is we got to see what a high functioning financial athlete looks like in the flesh. Getting up early, being really disciplined with what you're putting into your body. It was a vegan retreat. We had the apple cider vinegar in the morning. We also had some cayenne pepper every now and then. I'm not mistaken. We had the ice baths. We also had the sauna, yoga. It was phenomenal. And then we had, a few hours of speaking. Then we'd do, Muay Thai or calisthenics in the middle of the day. And honestly, it felt like we'd packed in a 9 to 5 by lunchtime. And then we'd be doing more workshopping and speaking in the afternoon. And I think that was really a huge value add for all our clients and also for myself and professionally. And if we can add this really strong element of that holistic side, like money isn't everything. I know we're here to make returns on our investments, but also if we're fostering that side of our lives and that wealth, because wealth creation is not money. It's not all money, at least. There's a really large component of it outside the financial markets, which a lot of people don't appreciate. I think Joe really gets that, and we wanted to tap into that, which I think we have. And also, you can feel it in the community in the mastermind group. Even though the market hasn't done what we wanted it to do, um, this side of things can, you're really focusing on what's important in these moments, but you're also being very diligent in how you're approaching your portfolio, just being smart about it. You're not trying to force anything, but you're also working on other sides of your, um, who you are and how you approach the market. Another win for me, just quickly, guys, I'm really proud of our push to find truth tellers and industry leading partners that align to our core values. And we saw that on the boat, and we saw that ACC. We're making really big inroads in finding those people. Like I think Jamie Coots from Real Vision, we're strongly aligned with what he's about. Check on Chain, Checkmate. Also got Charles Edwards, Capriol, and a host of others. SwiftX team, like these people, these companies are really important to us because if we don't align, we won't do business with them, we won't interact with them. But I wanted to get as many people like that to give you world-class insights as possible, because not only do we align with their values, but we think that their vision and how they view the market is really unique and really strong, and they're best in class. So if we can make those partnerships, you get more value, and your insights around the market will be really, really strong. Also for the masterminds, it's been our biggest year ever with close to 50 mastermind clients. I've had the pleasure of working with you all. Some come, some go. It's all part of the process. That core group of masterminds that we've seen on the boat and ACC, and also some that didn't come, that's things get in the way, you can't come, that's fine. But it is a very special group of people. And I just wanted to note as well, what's really impressed me, guys, is your resilience and fortitude that you've shown this year when things don't always go your own way, or the way we wanted it to go, and it's really impressed me. So you've grown, you've adapted, and you set a new course that will ultimately serve you really well in 2026 and beyond. And I think that's the way we need to really view it. We can't get too down when things aren't moving our way. These are money markets. You're extracting capital. Someone's losing money, someone's gaining money, and you can't win all the time. And it's not always easy. And that's the thing with these 4-year cycles. The last 2 cycles were incredibly easy in the respect that you could have just thrown darts at a dartboard, held something for a certain amount of time, and be incredibly rich. This time it's institutional. They're looking at the top end of town, looking at Bitcoin, looking at Ethereum, and this time horizon, this time preference is expanding a little bit. You have to be very, very patient. I feel whatever's happening here is we're now starting to really grind through it, and hopefully we see a bit of upside, after this. But I think we just need to be patient here and not get our expectations too high. But we know where this is going. We know where Bitcoin's going, and everything else. I think rising tide lifts all ships. But again, I think we need to be very selective. With the assets that we're looking at in the institutional era, it has to be really based around ETFs and other catalysts. For me, and I wrote this in the newsletter, I think crypto really stays quite muted outside, maybe the ETF cryptos and maybe even those as well, until we get some kind of Clarity Act, a structural guideline bill in the United States, which kind of create that rules of the road, removes that, the third party exchange issues, which we have seen, happen. I mean, why would institutions want to buy some of this stuff when, a Binance or whatnot can have a systemic issue, an auto deleveraging? Can just and also I would say the market makers behind the scenes of these exchanges as well. I mean, they have an outsized say because of the liquidity. When it's maybe shallow, they can really move things and maybe force an agenda to liquidate as many people as possible. And these are financial markets, but it's still a little bit of the Wild West. And I think for crypto, not Bitcoin, but crypto, it needs a catalyst. It needs more structure and confidence. But I do think that this is all grinding higher. It's all building a base, but it's like that time-based capitulation that drives everyone bloody nuts. So let's get into some points. Thank you for listening to that. I just wanted to share it because some of you did ask. So, and we're sharing this full session today, guys, because I wanted to share that, and I also wanted to share just a bit of bigger picture here for you. Once a month, or maybe more often than that, I do want to share the mastermind content with everyone else, and we go from there. But I was just incredibly humbled by everyone on the boat, and just generally when we have events, it's really fantastic to meet everyone. And yes, I'm just incredibly grateful for the love you share. And also the faith that you have in me. It's a responsibility I take very seriously, and I'm just hoping you continue to enjoy the insights. Okay, yeah, look, believing in Kuwait, Michael Saylor's there. He's in Abu Dhabi. He's doing a bit of a tour of the Middle East. This is no coincidence. Larry Fink, recently the head of BlackRock, has been saying that sovereign wealth funds are accumulating Bitcoin really, really hard on the dip, more than one as well. Abu Dhabi Sovereign Wealth Fund has been acquiring IBIT for some time. We know that fairly conclusively. But who else is? It's probably the Emirates, um, Qatar. So we need to just be thinking that this slow accumulation, the distribution of hands from the OG holders, the cypherpunks that originally mined Bitcoin and held Bitcoin. They now have the first time in history the liquidity with these ETFs and also the participants in the space now to actually exit their positions or exit a large portion of their positions to change their life fundamentally. If you're sitting on a few billion unrealized gains and you've held for this long, you might want to realize some of those gains without crashing the market 30% in just one sale, which they can do now, which is fantastic for them and good on them. But what we're seeing is this distribution from the old hands to a new type of cohort, to a new profile of people. We'll be writing about that in my trends report for next year, which should be about 30 pages long, but we're going to be looking at a lot of different things. But that's what's happening in the plumbing underneath. But Michael Saylor in these regions, I like this tie-in because he's a very persuasive guy, and he's going, no doubt, he's a billionaire. He's going there. He's going to talk with a lot of these sovereign wealth funds and really plug Bitcoin. And he's just a salesman. He'll go there and try and plug Bitcoin the best he can. Again, he's very persuasive. Matt Hogan from Bitwise, another good post about what's happening. Signal amid the noise. What's happening? Harvard ramped up its Bitcoin investment in Q3 from 117 million to 443 million. It also boosted its gold ETF allocation from 102 million to 235 million. Think about that for a second. Harvard decided to put on a debasement trade and allocated to Bitcoin 2-to-1 over gold. Yeah, I'm hearing this more and more, and the whole idea that Bitcoin's down at the moment is pretty incredible when you think about the tailwinds that we have. And I'd also point out, and I thought I had it up here, but it's okay that I don't. But kind of like the M2 meme that we thought, okay, Bitcoin correlates with M2, and it's diverged so heavily right now, and historically it doesn't do that for too long. It's screaming higher at the moment. So money supply is expanding. You've got risk markets expanding, gold expanding. Bitcoin is divergent right now. It's really, really divergent, and it's really obvious. It sticks out like a sore thumb. It's like, why is this doing it? Industry-specific catalyst? Sure. Maybe some manipulation. Sellers chipping in, suppressing price. Sure. But I think this is a beach ball being held underwater, and she's going to go much, much, much higher. Because directionally, M2, you say it's a meme now, that lag, blah, blah, blah. Same with the gold lag that caught me out. I've always watched gold, and Bitcoin generally has lag. But for me, you can get caught on this exact timing, 100 days, 3 months, all that kind of stuff. But just think, markets call this stuff out all the time. When everyone's sort of saying something will happen and look at something is going to happen in a certain amount of time, it generally doesn't. But what we need to think about these types of indicators and signals is directional guide. So M2 higher. Okay, so up and to the right, debasement, money printing, and you've got gold going higher, telling you debasement, money printing is going higher, rates are going to come down, all this directionally, that's telling you up and to the right. So Bitcoin, yes, is diverging right now, but again, there's not a universe where Bitcoin doesn't catch up to that if we think, well, I guess if Bitcoin is what we think it is. And it might just, again, something this just needs to digest and chop through whatever it's going through. Again, with all the things that industry-specific catalysts we've been mentioning for a while now, just needs to get through that. And then I think the release valves will go and steam will rise and Bitcoin will launch. MSTR is a really interesting symbiotic relationship to Bitcoin, and I've been monitoring it quite specifically. Recently, I'm an investor in MSTR. I'm looking to buy more at these levels. I'm really confident in buying as a risk reward here to lower my cost basis as well. But MSTR being below the value of the Bitcoin on its balance sheet, so the market cap's lower than the Bitcoin on its balance sheet. It's called MNAV. When it's in these types of levels, it's often a fantastic time to buy, just like last MSTR cycle. And MSTR often leads Bitcoin's bottom. or it bottoms shortly after Bitcoin. Again, it's kind of varied, but I've seen a pretty tight correlation that MSTR is more volatile. It's more leveraged in terms of its capacity for volatility, and that's what investors want. They want that volatility, and we've heard often so many times that MSTR is about a 3x levered play or 2.8 levered play on Bitcoin, meaning it goes up 2.8% more than the actual spot Bitcoin price. Well, it hadn't really for the last year or so. It hadn't moved with Bitcoin rather. But what it's done is MSTR is down 70%, while Bitcoin's down 30. So there is a sign there. Okay, the volatility is still there. And that's what investors are looking for. They're looking for that volatility. Yes, it sucks at 70% down, but if you're convicted on a company, these 70% drawdowns are a gift, 70% down from the high. Again, I think it's an absolutely no-brainer. And I love some of what Frank offers here. And I believe he works with check on chain. MSTR is the most oversold it's been relative to its mean price in 3.5 years, and the second most oversold since adopting its Bitcoin treasury strategy in 2020 was Jason. Right now, I'm just looking at this in terms of, all right, I'm looking for extremes in price. You're never going to get the exact low, you're never going to sell the exact high, but I want to see an area of an extreme. So I don't care if MSTR goes down to 150, 160, 140. I think 170 is a really good area to buy. If it goes lower, I'll try and buy some more. But if it doesn't, I don't really care. I'll halve my cost basis. So just wanted to share that. Also, looking across crypto broadly, you can flick back through here, a little bit red, but we're just starting to see, look, the market is very heavily pinned to be short, and it's becoming quite acute when you're watching this over a few days. And we look at the liquidation map as well. So there is a ton of liquidations above us. There's a little bit building, behind us as well, underneath 80,000. Let me just go out to the 7-day and 30-day. So again, it's building a little bit down here because there's a lot of people going long in the 80,000s and 90,000s, but there's been like a systematic wipeout of any leverage that's been long underneath 100K all the way down to, just under 80,000. Meanwhile, the shorts are getting really confident and the market is heavily pinned in one direction. When that happens, we generally see a spring the other way. When we overlay a lot of the other metrics that we look at, like fear and greed, NVT, and a few others, which we might check on Capriol in a sec, but a lot of these indicators that we check for are showing bear market areas and bear market low characteristics. So if we're thinking of kind of this slingshot or the beach ball being held underwater, it's being pushed down to a really, I guess, attractive area for bulls to start accumulating and causing the sellers to get overrun a little bit here. And if we can start to gain some momentum, everyone thinks we're going lower. A lot of people do, maybe not everyone. But if we can start to move higher, a short squeeze will begin to eventuate and the momentum can build. And that's what allows us to launch back through some resistance levels. And if we can get back above that 110, like 103, 104, even in the near term, you will begin to see a bit of FOMO, a bit of panic come back in from a lot of these short sellers going, okay, a lot of these positions are going to get liquidated and can start to create a really powerful move where they all get completely rinsed. And that will cause them to buy spot because they're covering their short positions by going spot. It's probably a little bit more advanced masterminds, you know what I'm talking about there. But yes, if they want to stay in their short positions, they'll have to buy spot, and that causes things to ramp higher as well as liquidating stop losses above. So I'm going to go to just Capriol dashboard and just run through a few things, just our usual walkthrough of some of the high level data. And then I'll check on some charts as well. So the dynamic, we'll go there, dynamic NVT, kind of like a profit loss ratio, but it's really, it's used in stocks a lot. And this here though is the NVT is often called the Bitcoin's PE ratio. It's a ratio of on-chain transactions to market cap. The use of dynamic range bands here helps identify regions of under and overvaluation, green and red. This has been a very powerful metric for Bitcoin. And I love that Capriol has this here. So over here, very obvious area of I guess, undervalued them with the FTX collapse, which no one could really foresee. It went down a little bit lower, but broadly, you can seeing the extremes, and that's all we're looking for here. We're looking for these extremes in the market, and you could argue maybe we're here. Maybe we're here back in 2021, where we had the sort of the move to the all-time high and a really aggressive correction, where okay, everyone thought it was completely over, going back to 10,000, but then we launched the next phase and kind of that stunted second top. But over here, we are at some seriously strong extremes in this ratio. And I think we're going to have some kind of mean reversion here. I really, really do, guys. Again, I'll just reiterate. So 2026, I think is going to be really positive. But again, it's probabilities. I'm maybe 80-20 on that. I'm really confident in my contrarian view there, as everyone's bloody bearish. But there's 20% there that I think we could easily be in a bear market right now. Even by sort of technical outlooks, we had a 20% plus correction. In traditional markets, it's generally a bear market. We've also lost some crucial moving averages, which has held up the bull market. So there's a really strong argument that we're in a bear market. For me, it's do we get a 2-year traditional bear market? And I really have a hard time seeing that happen, particularly when this cycle is completely different. We had an all-time high for the first time before the halving. The macro is totally different. We're moving into a period of loosening, not tightening. I could talk about this all day, but yeah, this time is completely different. So do not expect things to play out exactly the same. In fact, almost look at this, and this is how I look at this. This is Bitcoin's like the commodity. It's tech. It's entwined with everything. The tailwinds are very, very big. And I would expect Bitcoin to start acting on the chart as more like a gold or an S&P style, where we have the slow grind up and to the right, and then we have corrections in between, but they're quite short in duration. They're not really long, aggressive, year-long bear markets. And I mean, if you look back on the last year, Bitcoin's been flat, essentially flat. It retraced all the way back to the start of the Trump pump. We have gone all-time high. We've come all the way back. We've just chopped around. We've rinsed everyone. So a full year, no parabolic top, no euphoria, no nothing. Just doesn't make sense that this is the end. Or had a bear market. We're moving through it now. We've maybe gone through 6 months of it already. Again, it's just speculation. Let's look at when we're bullish and when we're bearish. I'm trying to look around corners and see, right, does this make sense? No, in my view. Okay, cool. So there's an imbalance between the price and fundamentals. So we should get some kind of move in 2026 higher. Good one on the MBT. Fear and Greed Index. Let's have a look here. So that was the S&P. And S&P is a good one. Like, I just don't think we can have Bitcoin moving really strongly higher if the S&P isn't, I guess, finding that bid, because the liquidity is moving around and sloshing. AI as well probably is taking a bit of shine off Bitcoin. Just how easy the gains have been in stocks. Now, why would you be in crypto when you can get these easy gains? But again, it swings and roundabouts. So BTC here, the last two major corrections in the ETF era, Fear and Greed has poked its way down to under 18%, and I think we got down to 6% on the Fear and Greed. So ETF era, these three humps essentially, finding those lows before moving higher, low before moving higher, low. And I mean, you imagine if you deleted everything from the right here onwards, or over here, everything from the right onwards, it would look bloody ugly. Over here, it would look bloody ugly. Lower high, lower high, lower low, lower low. Everyone thinks we're moving lower. So at some point, we're going to have to climb a wall of worry. Which means high highs, high lows, and everyone's like shorting into it. This is going to roll over. This is a bear flag, et cetera, et cetera, et cetera. And then we just start moving higher through some levels and go, okay, well, things are interesting here. It's starting to move higher. Global money supply. This is generally a good one to look at, and this is good too, because this not only includes M2, but it includes the central bank balance sheets, and we're coiling again to move higher. Again, something's holding Bitcoin down here, but it won't forever. M2, central bank balance sheets, liquidity expansions, all coming. So, yeah, again, I just see opportunity here, guys. I don't see the opposite happening, which is just, okay, let's go on a multi-year bear market. That might happen if, there's some sort of deflationary issue, or maybe a freeze up in the treasury market when we can have a very serious drop down to maybe the 200-week moving average. That's the only way I'd see it happen. Some kind of freeze up, some kind of lock up, liquidity issue, which if you have a look back in 2018 and 2008, 2020, when we have the treasury market freeze up, well, there's a big systemic issue. What happens? Yes, everything crashes, correlations go to one, everyone goes into cash really quickly. But what happens after that? Market gets hit with a massive injection of liquidity, everything rockets. Bitcoin in those situations has proven to be the fastest horse. Gold's going to do really well out of that. So look, it's kind of like, what's your time horizon here? And how can you predict a big black swan, a big market crash? And bears love to do that every bloody month. People love bears. People love to be doomerish and waiting for the next big crash. Everyone wants to buy the next 2008. And this market has just continuously moved those goalposts higher. You be very, very careful just banking on a massive crash, particularly when everyone wants it. Because I know that people want to buy now. Now that we're at 80,000, now that we're back at above 90,000, but when we were down at 80,000, the goalposts move. And go when it was at 120, it's like, oh gee, I wish I could have bought at 90,000. I wish I could have bought at 80,000. When it actually gets there, it's so scary and it feels really uncomfortable that you don't actually buy. You start moving the goalposts and go, oh, it's at 82 now. It looks a bit weak still. I might wait till 70, I might wait till 60, I might wait till 50 at the 200-week move average. You start to get a bit greedy on the downside targets. And with Bitcoin, that is a bit of a fool's errand. I think you really need to be just locked into, okay, 30% correction, that's a buy every day of the week. I don't care if this goes lower. If it does, I'm buying some more, adding to my longer term stack. That's the way I approach Bitcoin and is, over a long period of time, it's the best way to do it. The heater, I really like this metric, and I brought it up to you guys. I posted on Twitter not long ago with and Charles Edwards. This is his stuff. He loved it. Just sort of it's his stuff. But I was just kind of thinking through it, like how does this work? And generally, when the open interest to market cap's moving higher, so up into these elevated levels, I quickly noticed, okay, well, back in FTX, open interest to market cap's all the way up here, while the heater is, in the green, meaning that one side of the market has been completely obliterated. And in this case, it was the longs, those FOMO longers have just been rinsed again and again and again. And they've been wiped out, and the market is pinned in the other direction, going, oh, easy short forever. Let's keep going. And this just shows you when the heat is fully taken out of one side. And it is a tremendous indicator. We're seeing that here. It's dipped down to the green while the open interest market cap's all the way up here. I've simplified this massively because I don't want to go into the weeds on this, but we're there as well. So leverage is a big part of this market. And if the leverage is subdued or pinned in one direction or just rinsed, generally then you can see the spot buyers begin to organically move the market higher. Now again, that doesn't stop, massive OG whales unlocking billions of dollars and, from Binance or whatever, and just nuking any rally, which it has been doing. So you just have to keep that in mind. But all this is really positive signs. Institutional buying is probably my favorite dashboard on Capriol. Um, and it's beginning to turn up positive now, which we're waiting for. And this is the thing in the institutional era, institutional flows run the show. So if this begins to tick up, do not be surprised to see Bitcoin back above 100K pretty quickly. So Bitcoin mined every single day is this red line here. And you have to think, okay, when Bitcoin's mined nowadays, what do the miners do? They mine it, they sell it immediately to cover their costs, electricity costs, their labor, whatever they're doing. They have to pay all their bills. So they sell it immediately. So that's essentially the rate of selling on the market that's guaranteed every single day. Now, the orange line here is Bitcoin treasuries. So I think MicroStrategy, MetaPlanet, etc. The demand, so the buying of these treasury companies, sort of reached a peak around here. It was doing really well over here when it was really popular. But the bubble kind of popped on the treasury companies, through here, and had a little bit of a last gasp here when MicroStrategy was really buying hard. After that, the demand of these treasury companies buying Bitcoin has completely died, and it has fallen beneath the amount of Bitcoin that are mined, per day. So that's a signal. Then, so okay, so demand from that side, which was really giving the market some buying power and some buoyancy up in these higher levels. Any dip was okay. MicroStrategy was buying. Any dip, MetaPlanet was buying. It's really creating a demand drive was fantastic. That doesn't include, things like Tether and other things just clipping over and buying Bitcoin. So they're a demand driver as well. And that's more with the blue line here, because the total Bitcoin being bought is at the demand. The ETFs, probably the most important line on this chart, which is the green. So the green here, you can see, when Bitcoin's in a really strong state, the ETFs are buying hard. When we're moving high, the ETFs are well above the amount of Bitcoin mined. It's well below. Now, the positive here, and when I saw this down here, I'm thinking, okay, great. It's kind of in line with previous corrections here where there's a lot of fear and a lot of panic. ETFs, all of them, the weekends are kind of quickly selling out and it's forcing the demand down. You see a lot of outflows, but then you kind of reach a period where the outflows are just too much, and then they begin to moderate. They slowly get back to maybe, a neutral state. Now we begin to see inflows as investors begin to see value and they begin to buy, and that's the demand coming in. And once the demand, sorry, it goes from selling to buying, the price of the asset generally rises. And the ratio down here is really, really important just to watch, because it drops beneath that amount of Bitcoin mined. So you've got all the Bitcoin demand is from the institutions is dropping way off. Same with the ETF, same with the Bitcoin treasury. You can just see the ratio. When it's deep red, it means we are dropping quite heavily beneath the Bitcoin mined. Over here, deepest we've been in the ETF era. So that to me was like, okay, ding, ding, ding. We just have to wait here. We can't go too aggressive in risk. We can't say anything's happening for certain. But once we get this back above here, it's kind of like a mean reversion. We're going to see that demand really begin to come in. So we can have some alerts when this does happen. But when we see, I think the ETFs cross back above here with the Bitcoin treasuries, I think the market has well and truly bottomed. And we're seeing the demand really begin to kick higher. So love this chart. Keep looking at it. It's just so useful just to see how strong is the underlying buying. Treasuries flat, so they're not really selling, but they're not really buying. That's fine. ETFs buying heaps, sold a bit. Now they're flatlining. Great platform for maybe some kind of plateau and then building higher. Total Bitcoin, so again, just think of Tether and all those others. It's plateaued a little bit, but now we're seeing buyers hopefully begin to see value and move in it and buy. Mayer multiple looks at standard deviations from I believe it's the 200-day moving average, where levels were reset time and time again. Like we're moving, we didn't quite get down to FTX levels, and we can. And if we did drop down back into the green, that would be like a full reset. Like we've gone through a bear market and then we're climbing out of it. So absolutely wild that we're actually down here. But we're not. How far? This is ridiculous. Like how far below the 200-day moving average we actually are currently, and how much room now, especially on the daily, the weekly, the monthly, that we have to go higher in a pretty aggressive move. OG whale dumping. Let's see if this was still quite useful. Yeah, the OG whales have plateaued a little bit. They've come back in a little bit, but it's not crazy. So this is why I'm really looking at that institutional buying chart, because if those ETFs begin to fire up again, it doesn't matter about these whales. They're just going to get hoovered up, and they're a finite seller. They're not going to keep selling forever, because there's just not that many entities from those eras anymore that want to completely take full tilt. Another great metric here: production cost of the market. Every major correction we have had, even going back, to bear market lows, we've come down the production cost. We've dropped it a little bit beneath it, but we've never gone to the electrical cost. So there is a fundamental underpinning or a fundamental value to the market, and the production cost and the value is about 80,000. So that's really good to see that we've come down. This is, sloping down, so that's, a little bit problematic, because we could just ride this down a little bit lower and go into the 70s. That's fine. I do like the 80,000 to 82,000 region is the true mean of the market, which is an on-chain data set that Check On Chain uses, which is the average cost basis of Bitcoin investors minus Satoshi's coins. And that to me was a bear market level, which I wanted to buy in the bottom of the bear market. But we got here so fast, and I'm thinking, shit, we already had the bear market. Again, these are just thoughts that are popping through my head. I'm not saying anything for certain, but I'm just working my way through it, because some of this stuff doesn't make sense. As in the price of again, you're not wrong, the market's wrong. So you have to be a little bit alert to that as well. When you keep sort of staying in denial and just going like, nah, the market is wrong, I'm right. That's, again, you have to check yourself, which is why you need to operate on probabilities. So you want to be a little bit careful, this time's different, and just sticking to your guns, and, until it just gets so low that it's you're wrong and you're pointless. So again, optionality is where I'm at. Altcoins, ugh, right now, pretty dead. Speculation index, I'd love to see that move higher. US liquidity, there was a period of tightening in the back end of the year when we had the TGA refill, and it's still dropping, even though stocks are moving higher. So again, we haven't even seen any sign of US liquidity really being high. A lot of this has been happening in the rest of the world. So what this actually shows to me is we have got so much more room for liquidity injection next year. It's just not funny. And for mine, the Russell 2000, which is the kind of like ISM, the business cycle, which I think Bitcoin is operating on right now in terms of, okay, where are we at? when's the next leg coming? I really think it's when those mid caps, the mid tier of the US economy, is showing signs of life. And then we likely see an up move. Again, it's all kind of piecing things together around the business cycle and liquidity. But that's generally when we see, again, the positivity and upwards mobility begin to come back in. The yardstick here was interesting. So where are we about this metric? Similar to P/E ratio, except instead of earnings, the Bitcoin yardstick is taking the ratio of energy work done to secure the Bitcoin network in relation to price. Lower readings equals cheaper Bitcoin equals better value. So, we're at the production, value. This has historically been a bear market low. So yeah, it all looks good. But yeah, you can sustain these areas for quite a while and move lower. But we're in an extreme area, which is really important. All right, let's touch on the charts really, really quickly, guys. I'm just conscious taking too much of your time. So we've probably discussed more than I wanted to, but yeah, it's a lot of fun for me. I hope it's fun for you guys. Bitcoin still has so much work to do. It's in this downtrend. This is on the weekly. It's beneath the 10 weekly EMA here. I just don't think you can get bullish at all until we're back above the 50-week moving average, above that 102 level, which is the 10 EMA for the monthly chart as well. But that said, everyone's pinning sort of this is a bear market and we're going down. So as long as the 100-week moving average here holds, you can see it here, just their perfect level, 84,000. As long as we stay above that on a weekly time scale, so keep closing above it, which we're doing, then we're fine. We've found a sustained local low. It's just whether we sort of run back up in here, find a sort of a resistance level and dead cat all the way down. But that's levels crucial. It's not over until it's over. And I'm seeing these momentum indicators down here. Stochastic's bottom, MACD's bottom, RSI is in a position not seen since, on the weekly anyway, down 24th of October 21. So that's the bear market, around the bear market low of 21 on the RSI. Does not mean the RSI cannot go down into deep oversold, which, is kind of the start of the final capitulation before the FTX move, and then a bullish divergence on the weekly emerged. But yes, we'll see. We'll see if that does come to pass. Let's go down onto the daily though. We're beginning to see, on the weekly, some signs of reversal, but it's following my squiggle here a little bit, kind of like run into resistance, come back to former higher lows. I love that. And then we get the true expansion. This wiki is a bit of an outlier on Binance. I don't know what was going on there. We ran up to 99K on every other exchange. It didn't. So just keep that in mind. But this looks very constructive. However, it's running into that resistance level there. We really want to punch up here and start closing above 94,000, 93, 94,000. And then we begin to run and test some of those higher levels. Everyone wants to short. Everyone wants to sell into these areas. So don't be surprised if it actually starts ripping through some of these areas and causing a bit of panic up here a little bit. Then we'll kind of see what the go is for Bitcoin. We also have to be wary that this could actually be some kind of bear flag before running a bit lower, or maybe just drop back into the 83, 84,000 range to really cause some panic. That's possible as well. But these areas up here, 103, let's clear that, get above the 200-day moving average at 109. So they're my two real strong levels. And ultimately 114, where we're looking really pretty. So yeah, that's pretty much all I'm after here, guys. I like the look of ETH, and I'm looking at the Bitcoin pairs exclusively. FBTC is looking really good. It's breaking the downtrend here, but I do want to see ETH above this core level. Flip that at 35. And then once that does, then I think ETH has a really good runway to maybe 0.04. So ETH is looking quite nice. Solana starting to look okay, but honestly, guys, you got to wait for some of this stuff to close a little bit higher. And I want to see some more engulfing candles. The engulfing candles I'm talking about, you can likely see, here's an example on SUI, which I'm not saying SUI necessarily goes higher here, but when we're looking into key support levels, which this was here, you can see we had these two candles here, okay, sure, but it ran into the downtrend resistance all the way back down. This candle here completely erased all this price action up here and broke the downtrend, and now it's forming a sort of higher low, trying to do this higher high situation where it expands up there. And I got an alert there for the mastermind clients. There's every chance if it loses this level, it's then dropping down to lower lows. So just be careful, which is why we need to stick to weekly signals just for peace of mind and waiting for those engulfing. Now, right now, we've had 3 weekly candles that are inside this weekly here. So we really want to break this to really crack the trend a little bit wide open, to be honest. But I think SUI is going up to that 2,000 against Bitcoin and on the USD chart, that would probably be what, $2, something like that. But there is, yeah, some good looking charts shaping up. I'm just, again, cautious of getting into anything too soon, waiting for a bit more information. I want to see Bitcoin shows us some stability first. I did see someone, and BNB looks okay. I did see someone posting the VIPs that the USDT dominance was, breaking down, looking a bit weak. It maybe on the daily, etc. But just think, okay, this is still above the 200-week moving average. It's forming a bit of support base up here. What we ideally want is to lose that 200 and begin to break down, because then it can really start to, ruin everyone's bear party, which is great. If we go down to the daily, what's it looking like? Could be rolling over again. You kind of want to see those engulfing candles which we were talking about, and losing core levels, because you can't really view anything too much here. I mean that said, you got high, lower high, lower low, lower low. So unless this is some kind of wedge, which it's looking to break up from, this very well could be looking to break down here. So yeah, if Bitcoin wants to go higher and altcoins, spring higher, then this is going to roll down. If this continues higher, then it's more likely that the pressure is going to be put on the market, and it's not going to be, pretty reading. So I think that's everything, guys. You can see the assets that I'm really watching now at the moment: Ethereum, BNB, Solana, Pax Gold. Still really focused on that because it's been such a strong winner. It holds up against a USD. It's been going higher against USD, and also it's been holding its ground against Bitcoin, fluctuating a little bit, but still quite a strong ebb. But if Bitcoin begins to really find its feet, gold is going to lose a lot of ground to Bitcoin. So just be aware of that. Yeah, the BNB chart, BTC charts rather. Keep an eye on them. Watch for those weekly breakouts. Again, alts have been smashed so goddamn hard for so long. Do not be surprised to see some 20% rallies, at some point. If Bitcoin begins to retake some levels that people thought they wouldn't take, look out on some of these altcoin charts, because the order books are so thin that any algorithms and buyers begin to come in any meaningful amount, yeah, we could see some strong rallies. But again, are they sustainable? And I think that's where we really have to be vigilant and watching those Bitcoin pair charts for sustainability of strength. And if there's no strength in the Bitcoin pair charts, be very, very careful, because this could just be a short-term pump and dump, a bit of an explosion in liquidity and then a rinse and then move away. But if people are selling their Bitcoin and moving it in to the asset, and you're seeing sustainability, then eyeballs going at people watching go, okay, great, this is sustainable, this is engulfing candles, it's breaking out reversal trend, and then it begins to trade, you get a lot more attention, volumes, price leads price, momentum leads momentum. All right, guys, I will stop talking. I hope you have a wonderful day. Thanks for listening. Any questions or comments, let me know. That's my state of play. Have a great day. As you can see, bye.